Hey guys, Boris. Welcome to the commodity dollar update for Aussie dollar, dollar CAD, Kiwi dollar from May 8, May 12, 2017. And this week, actually, commodity dollars take center stage. We had certainly some movement last week as well, but this week we have a lot of event risk on the commodity calendar, and it's worth taking a look at it first. So on the event calendar, we have the Aussie retail sales budget, annual budget release out of Australia, but we also have the RBNZ cash rate decision on Wednesday, which will be the central, I think, development for the commodity dollars. We'll see just how dovish the RBNZ wants to be at this point, given the fact that Kiwi is under 70, and whether they're going to continue to try to job on the currency down or remain relatively neutral. Because if they do remain neutral, I think that plays to Kiwi's strength, which has already seen relative strength this week, very much in his trade. If you look at the charts this week, it's been kind of actually quite interesting. So the Aussie was no doubt one of the worst performers this week. And just kind of, and this is weekly, let me go down to the daily so we can really see the collapse in the daily. It's just been, it broke that 75 support and has been just constantly drifting lower. Although we did find today I think the first sign of a modicum of support. A lot of the weakness in the Aussie has been driven both by the fact that we have a weakness in the commodity sector, period, iron ore prices going down, gold going down, and the fact that U.S. yields continue to creep up. So the carry trade, which is the primary driver of a lot of Australian trade, continues to compress against the Aussie, so there's a lot of liquidation on the carry trade. Having said this, though, Aussie does appear to have at least a modicum of support here underneath this 74 level. 73.50 is the real support level in the Aussie. 75 certainly very much now looks to be the resistance. In fact, Aussie really becomes at this point, barring a massive change in sentiment towards commodities, a sell the rally trade. You definitely could see a possibility here to run to 75. So I wouldn't be averse trying to buy the dip here with maybe a 73 stop to see if we could make a move towards 75. But at 75, it's very much a fail the highs trade at this point. If you look at the Aussie over a long-term period, it's been nothing but a failure of lower highs here. And I think the bet still continues that we could unwind all the way down to 72s, given the fact that the commodity demand continues to slow down. And I think the other big thing that I didn't even put on the calendar, let's just, this is actually worth adding to the calendar. The Chinese data, we have a very big Chinese piece of data coming up. It's tentative, but we have the trade balance data. There's been a lot of chatter in the financial press about concerns over the Chinese banking system once again. The shadow banking system, the wealth management products, all sorts of problems in the Chinese banking system as the expansion of credit has really gotten out of control. So it really needs a very, very healthy trade balance to continue to attract capital into its current account, and therefore provide some sort of strength in the whole Asia-Pacific region. If we start to see China begin to wobble, Aussie really starts to tumble hard. So that's why on a longer-term basis, it's very much a sell the rally rather than buy the dip trade. You could try to buy the dip here for a small bounce, but I think anywhere 74.50 to 75, I don't want to be a seller, and I would only stop myself out above 76 on this trade, because that would be a complete technical reversal of what has been a very strong downward trend. Now, Kiwi, on the other hand, has found much better support above the 68s. And so this week's RBNZ statement could be quite interesting, because if they're modest, even if they're just sort of not dovish, we could see a relief rally perhaps all the way out to the 70. 70 is still very much a big resist area. Don't get me wrong, I don't think the Kiwi is kind of an unrelenting buy, but in the near term, it certainly shows some relative strength here and does have some more room to go towards the 70, at which point it also becomes much more problematic long and probably a much better short, because overall, if you look at the longer term picture here, it's still a continuous stutter step move to the downside. Commodities very much under a gun at this point. The one advantage is Kiwi, of course, is soft commodities versus hard commodities. Actually, dairy prices went up. The GDT, I'm sorry. The global dairy auction was another good one last week. So there's clearly relative strength in the Kiwi. There's no doubt in my mind, but it doesn't mean that I'm an overall bull on it. I think I would be a relative bull on it versus the Aussie, but not an overall bull on it at this point. Now, the most interesting story of the week was, of course, the caddy. And I want to bring this attention to you last because I find something quite interesting here on a technical basis. So dollar CAD, obviously, got squeezed mercilessly because oil prices went all the way down to 44s. Oil seems to have found at least a modicum of a bottom here at 45. And we had a massive reversal here in dollar CAD today. So if you remember my favorite dictum, which is the volatility candle, this is the repeat of this particular pattern. Now, the only problem, of course, is that even though it's a good signal, it's a good signal in terms of direction. It is not a great signal in terms of timing. You just don't know when and if you're going to have continuation move to the downside. Could we have a painfully slow repeat of this kind of a move? That is where we have the down signal, but then it takes almost a month for us to get any kind of traction to the downside on this place. The answer is yes, but I think we have to be much more tactical in trading this. I like this as a short. This is a strong, strong signal for at least a move down to 36, maybe 35.50 before it finds, modicum of support. I don't think this is a one-day wonder. So I like shorting this in tranches. In other words, I want to be short here, and if it starts to rally, I want to be short against the rally all the way with a 138 stop. What would completely take me out on a stretcher in this trade? It would be oil. If oil starts to collapse further, yes, we could have a massive reversal of this. This is in many ways a reflection of both this massively overbought rally and the fact that oil finally bounced. It is an implicit bet on the fact that oil does find a little bit of support here. And I think at 45, it's a reasonable bet that oil finds some support here. We've had a huge amount of hedge fund liquidation this week, so a lot of the financial pressure on the market probably gets lifted. So to me, I like this trade technically. This is a very good technical signal. As you can see, these technical signals have meaning. Here's a big volatility breakout. Now, the continuation here, as I said, it's not definitive. In other words, you don't know exactly how much, but you have a very high degree of possibility that there is going to be some. I would say, very minimum, we have at least a 50-point worth of continuation here down to the 36s in dollar CAD. So I would want to trade this. I would want to be short this and short against the any kind of a rally for a good average price that would at very minimum take me back out of the original entry. This is one of my favorite technical setups for the week, and that's one that I would want to be looking for next week as a sort of a mean to reversal trade that's taking place on a technical basis. So that's how the COM dollars shape up. There's a lot of interesting stuff this week. They're finally taking center stage and maybe getting a little more volatility. Wish you guys the best of luck, the best of trading. Boris, over and out.